Yes, you can get the one check and take the $50,000, but it is an adjustable rate mortgage based on the prime rate of money plus a margin set by your bank depending upon what deal that you negotiate and what products that they're offering. So it's an adjustable rate based on that prime rate. It's not fixed. By the end of this video, you're going to understand a very clear concept of a home equity loan versus a home equity line of credit. So stay tuned. Welcome to your one-stop shop for anything and everything mortgage education. My name is Stephanie Weeks, and I have been a loan officer for 17 years. I've been recognized in the top 1% of loan officers in the nation for the last several years in a row, and I've also been recognized in the Scotsman Guide for the top 4,000 originators in the country. Please subscribe to the channel and don't forget to hit the bell to be notified every time I drop new videos, which is every Tuesday and Saturday. Why is it important that you know the difference between the home equity loan and the home equity line of credit? Is a rate important to you? Are fees important to you? Are repayment terms important to you? Are balloons or adjustments or recaptures scary words? Because they probably should be. If all of those things are important to you, that is the why as to why you should hang tight. Check out this whole video so that I can tell you the differences as promised between a home equity line of credit and a home equity loan. What is a home equity loan? Very simply explained, it is a loan that is allowing you to take equity out of your property, basically taking cash or take money from the equity that's in that real estate that you own. A home equity loan is a fixed rate loan, generally speaking. It is for a fixed amortization. I've seen 5, 7, 10, and 15-year versions of a second mortgage, also known as a home equity loan. When you're comparing a first mortgage to an equity line of credit to a home equity loan, a home equity loan is going to have the highest interest rate of all of those three scenarios. What is a home equity line of credit? Well, if the loan gives you the equity out of your house or some of the equity out of your house, and it's a fixed rate and it's a fixed term, let's say if it's $50,000, you get $50,000, you do what you're doing with the $50,000 and the payments start and they're based on $50,000. Well, a line of credit works differently. If you receive a $50,000 line of credit, yes, you can get the one check and take the $50,000, but it is an adjustable rate mortgage based on the prime rate of money plus a margin set by your bank depending upon what deal that you negotiate and what products that they're offering. So it's an adjustable rate based on that prime rate. It's not fixed. It is an open-ended line of credit. So it is not a fixed term such as 5, 7, 10, or 15 years like I talked about with an equity loan. Most of the time, the line of credit has a renewal like every 5 years where they reassess it, see if they're willing to give it to you again. They may change the terms and conditions based on the new deal that you negotiate at that time. Another big difference is that line of credit. Let's say you get the $50,000 line of credit. Let's say that you never use it. Well, you never pay interest on it because the line of credit, the payment is based on what you've drawn to that point and what's outstanding when that payment is due. Let's use some simple numbers. $50,000 loan, okay? Let's say if the payment is $500 a month. You get $50,000, do whatever, you're paying $500 a month, $500 a month, $500 a month until it's paid off. Line of credit, $50,000 line of credit. You use $10,000. You don't use the $40,000. You're gonna pay interest and a payment on the $10,000. Another huge feature, let's say now you need another $10,000 and another $10,000. You have access up to $50,000. Let's say that you get a $50,000 line of credit, you use $10,000, you pay it back, it's back down to zero. While it remains at zero, you have no payments. But then, let's say that you need to write a $40,000 check real quick. Boom, write it off the line of credit. It's flexible And there's a lot of examples where a home equity line of credit will be phenomenal for some people. But I find for most people that I've dealt with, you're gonna want more of a closed-in loan, fixed rate loan, not adjustable on a certain payment. Most people aren't looking to draw and give back and draw and give back. It's a line of credit to be used almost like, let's say, your credit card. You know, you've got a $50,000 limit, you use 10, you pay it off, you use 10, you pay it off, so on and so forth. I tried to make this video short and sweet for you today. It is a short and sweet topic. I'm gonna go ahead and give you a link to download my book for free. That's the international bestseller mortgage piece, talking about how to get you a smooth and on-time closing. Click the link below. So do me a favor and type yes, all caps, YES in the comments if you now know the difference between a home equity loan and a line of credit and know what might be best for you. Give me a big old yes. Don't forget to subscribe to the channel, hit the bell to be notified every time I post new videos, and let's connect. My Insta handle is _TheRealStephanieWeeks. Stephanie Weeks is one of my websites. Weeks Team is another one of my websites. And I always welcome the personal DMs and also the comments that you guys leave for me. I respond to all those personally, and I love helping you. So thank you.